Good morning, everyone. Good morning, ma'am. I am Annalyn Artares. So today, I am about to discuss the financial institution. What is a financial institution? A financial institution is an organization that provides financial products and services to customers. From the word finance, it's talk all about money. An institution means organization. Financial institution also provides products like checking and other accounts that help consumers manage their money. They also provide services and advice to help consumers meet their financial goals. There are nine financial institutions. First, central banks. Central banks are the financial institutions responsible for the oversight and management of all other banks. So, central banks has the higher authority of all the banks. Individual consumers do not have direct contact with the central bank. Instead, only large financial institutions work directly with the Federal Reserve Bank. The Federal Reserve Bank of the Philippines are ang Bangko Sentral ng Pilipinas. They are the one to provide products and services to the general public. The function of central bank is to issue money, ensure the stability of banking system, lender to commercial banks, set interest rates in a monetary. Financial institutions are the retail and commercial banks. Retail banking refers to offering of financial services, products related to deposits and assets to financial customers or for personal consumption. While commercial banks are profit-seeking financial institutions that take deposits from customers at a lower rate of interest. Retail banks works for consumers while the commercial banks works for businesses. The third one is the internet banking. Internet banking allows you to conduct bank transactions online instead of finding a bank and interacting with a teller. In a broad sense, it is use of electronic means to transfer funds directly from one account to another rather than by check or cash. Internet banks is a newer entrant to the financial institutions market, which works similarly to retail banks. Internet banks offer the same products and services as conventional banks, but they do so through online platforms instead of brick-and-mortar location. Internet bank, also known as virtual bank, an online bank, or a web bank. It is a bank that lacks any physical branch location and exists only on the internet. The fourth one is the credit unions. Credit unions serve as a specific demographic per their field of membership, such as teachers or members of the military, while products offered resemble retail bank of offerings. Credit unions are owned by their members and savings and loan associations. Savings and loan association, or S&L, are type of financial institutions that help customers save money by allowing small deposits and home loans. It is also known as thrift institutions. Investment banks and companies is a financial services that acts as intermediary in large and complex financial transactions. It is usually involved when a startup company prepares for its launch of an initial public offering and when a corporation emerges with a competitor. Investment banks do not take deposit. Instead, they help other businesses to grow and governments to raise capital through the issuance of security firms. Brokerage firm is a firm that conducts transactions on behalf of a client. Some brokerage firms only conduct transactions while others also offer different types of investment advisory services. Companies. Insurance is a contract of indemnity under which insurance company or insurer agrees to pay a certain sum of money to compensate loss caused by the occurrence of an uncertain event in consideration of certain periodical payments. Mortgage companies. It is a financial institution that originate or fund mortgage loans. So what is mortgage? Mortgage is a loan that taken out on a valuable item, usually a property, with the property being used as the security. Most mortgage companies serve the individual consumer market. Some specialize in lending options for commercial real estate.